Hello, welcome to your mortgage rate forecast with Scott Criss. It's July 26, and let's get started with rates. Since my last report 2 weeks ago, rates are up 0.01%, which isn't too bad. And MBA is now reporting the average consumer on a 30-year fixed is getting a 4.77. And so where are we headed, guys? Well, let's get into the technicals. Bonds are flat today and trading at about 101.54. Now, not so helpful yesterday for bonds, but actually is good for the economy. Trump and Europe's trade wars kind of settled down, and with talks, or at least like a beginning of some parameters for the tariffs. So anyway, stocks liked it, bonds not so much. So we saw a little bit of fallout there. Jobless claims came out today, stronger than expected. But really not a big mover on the bonds because today is not the sample week. So durable orders came out as expected. So we aren't really seeing a lot of movement on bonds. Let's get to the charts. As you can see right now, bonds fell off a few days ago, sold off a little bit, nothing too crazy. We're talking what, 20 basis points, 30 basis points. So, you know, significant, but not worth writing home about. Since then, we've kind of flattened off. Now, the problem is when we take a look at the technicals here, we have resistance at 101.72, 101.84, and what I'm calling as the main resistance is going to be at about 102.5, 102.10. So you can see we have a little bit of room for growth, but a lot of barriers that are going to really slow us down. But below us, there's not a whole lot of support. Our next closest support is going to be at about 101.50. But if we break through that, which we can do very easily, our next support, if you look at my mouse, is going to be closer to 101.20 and 101 even. So there's a lot of room for failure right now. So and this is what's making the analysts pretty nervous. So let's kind of get over to Freddie, what they reported. June, they reported 30-year fixed was coming in at a 4.7 at a half a point. But that's when trading was about 101.80. Now trading's down to 101.54. So the average consumer trying to get that low of a rate should be expecting to pay more. Now, where are bonds headed? Well, you know, analysts right now on the short term over the next few days are kind of neutral, if not bearish. So they think the bonds are either going to stay flat or maybe sell off some more. But still long term, the analysts are thinking that bonds will continue to sell off. So that's really the big picture for rates right now is slowly increasing in that 30-year fixed. Now, where's my projections for the next 2 weeks? We're currently trading at 101.54. I think we could go up as high as 102.5. But as low as 101.10. So really, we are closer to the top end of this trading range. And so, you know, I think there's just going to be a lot of barriers that we're going to have to break through to get up here. So my bias right now over the next few days or the next couple of weeks is probably lock. I think we're going to see continued pressure of bonds, you know, selling off, unfortunately. So that's where we're at. But hey, what do you think? Leave your comments down below. We'd love to hear from you. Don't forget to hit that like button before you leave. And if none of this made sense to you, you're kind of new to the whole bond thing. Mortgage Bonds 101, that's going to be at your top right. Click on that and that'll teach you the basics that you need to know when you're trying to figure out the best time to lock in your mortgage rate. Anyway, that's it for this week. We'll see you in 2 weeks and have a great one. Bye-bye.